quieter weekend than usual. I just got back from Cannes in France, south of France. Yeah, it was really hot. It was like 45 degrees Celsius. And it was like 110 Fahrenheit. It was just insane. And they're not geared up. They don't have air conditioning that much everywhere. It's yeah, it's definitely a different experience. The apartments that do have aircon, which is pretty good, or AC, so that was pretty good. But other than that, it was yeah, definitely an experience, and it was a really great event. We were there for a stable summit promoting Nuon and Max Cap Token, where anybody can participate in getting yield, which is true inflation protection. On the one hand, with the Nuon token and with the Max Cap token, you can help allocate a portion of the yield into yield bearing opportunities and be allocator of that capital where that goes. The token and the protocol itself is backed by commodities, and they are generally inflation correlated commodities. Yeah, what are inflation correlated related commodities? Generally, oil, gold, silver, Bitcoin, and other assets that perform well in times of high inflation. So, where people go to protect their assets. Hope everything's working. Nothing back from the team. So all audio seems to be up and running. So that's pretty cool. Excited for that finally to hopefully the mic's working. Let me know if the mic's working, sound good. Let me know in the comment section on the YouTube side. Yeah, I will do it. Please smash the likes and let us know. Yeah, subscribe. That just helps us if we get better insights from you, and also moves us up in the ranking in the activity. Anyway, hi, I just, this is the Truth Nation or Truflation Nation live AMA session. I do this every Tuesday and Thursday, the same time every day. And what we do is give you a bit of an update of what's happening in the economy from a macro perspective, sort of what's going on within the Truth Network ecosystem, all the participants building around that, using Truflation, what we're seeing on Index Up Fund and Nuon and other innovations that are taking place on the Truth Network. That's sort of what this is for. It's allowing you to ask any questions you want. So any questions you have, please raise them during the chat, and then I will try and address those. Yeah, so today we're going to cover off a couple of different topics. Really, we had the JOLT announcement, which is the job openings in the US. We're going to talk about the promotion on Truflation and what we're doing there. Some of the news across different macroeconomic perspectives. Going to go into this big announcement around the European currency and the European Central Bank. They're meeting right now this weekend and today with all the top bankers out there. It seems that all these politicians go from one meeting to another meeting to another meeting to another meeting. I don't know if they actually do any work and execute, but we'll be covering off what some of the policies are, which are really scary around CBDCs and what that means, and why also we'll go into why it's time for you to really actually consider crypto as a safe haven and your only safe haven in the future. Anyway, that's sort of a bit of the agenda. That was feedback I got that you wanted to hear more about the agenda. Again, I'm Stefan Rust. I'm the founder of Truflation and the Truth Network, which powers a lot of the data and provides verification associated with all the data that is on the Truth Network, so you can get attestation associated with real world data. Anyway, this generally goes about 20 minutes, so I'll try and keep it tight. But welcome and happy Tuesday, new week. And yeah, summer's definitely here. So yeah, as I mentioned earlier, quickly, you know, we definitely have the jolt numbers, job opening numbers. They came out, and yeah, it's at a high. So a lot more job openings out there, which is a good sign. The bad, businesses aren't hiring quickly. So it seems as though the job openings are out there for longer. So people are taking their time in selecting candidates. They want to see many more candidates and find the right people for the right kind of future. That's what's happening in the job market. I think people are also conscious that they don't want to hire too much because a lot of the uncertainty that's taking place. And you can see that uncertainty really taking place if you look at what's going on right now in the in the economy, right? A lot of people are still uncertain where the market's going. You can see here's the conference board leading economic index. I don't know what that means. Leading economic index. How is that? I mean, it's basically a survey of their user base where they try to identify what the sentiment is out there with regard to the economic environment. And so it's been coming down pretty steadily, as you can see here in the graph. Um, it's down 16% from its peak, and hit a 9-year all-time low, right? So 9 years across. When was 9 years ago? Who knows, man? But 9 years ago might have been a long time. But yeah, either way, I don't need to look at that page. We can come straight here to the website page, the conference board. So they do a lot of surveys, and we've referenced them in the past as well. Again, it's a survey based solution. Why are we still in this day and age relying on surveys? As you know, we at Truflation try to pull in real time data sets, get real time sentiments, information as to how and what people are talking about across all the different platforms. Why? In a survey, you're going to respond with your mind. You have time to respond. There is a way that the questions are structured, and then you have time to think about it. You're not going to be responding from your heart. And when your heart responds, you respond much more how you really feel. And it's ideally a better way to capture the sentiment of the market is leveraging the heart, in terms of where you think things are going. You're going to be actually just responding to elements that you see, news feeds that you're reading, or even pictures you're taking and all the different things that you're doing. How do you react to those? How do you change the reactions? Either way, that's survey versus real-time data feeds, real-time feeds that you get when you subscribe to Truflation. And on that note, we talked about how it's coming down. People aren't as confident in where the economy is going right now, largely because of the negative news and media that's out there. But what we're trying to do is highlight something super positive, where we're offering up our subscribers, potential subscribers, you who are interested, and by the way, you who constantly, of course, subscribe to the newsletter, you are hitting the likes and subscribing to the YouTube channel and the Twitter accounts. So we got to get those up there, and we were asking you to get those up there. Why? Because it makes us be able to give you relevant content and help you find alpha. But what you can see here is we have a special July 4th Independence Day offer that's going to last for 7 days. And that's now live until July 7th. So 3 days after July 4th, which is Independence Day. And what we're doing is you have a 6-month bonus. So you get 18 months for the price of 12 months. And if you're an existing subscriber already, if you renew, you get an additional 10% off. So that's what we're offering. Sign up, just go. You can see all the data. We're bringing you more and more alpha. So we're getting trading opportunities, trading signals, and we want to really highlight how you can react to inflationary indicators and what they really mean to you based on real-time emotional sentiment insights versus surveys that go out, right? That's what we try to bring you. And as you all know, we are actually tracking a whole bunch of data, 100 million data sets across multiple markets, right? In the US, we've got about 30 million data sets that we're actually pulling in to be able to bring you a great Truflation metrics that you can see here. We did see a big drop in Truflation. You can see right here at the end. It's just a drop from 2.3%, 2.26, sorry, all the way down to 2.27, which on a year-on-year basis, right? So this is again comparing the numbers same time last year to this year today. And what is that shift? What brought about that shift? Again, if you're a customer and a subscriber, you get to see this before anybody else. So you get a premium subscription email that notifies you of obviously the promotion that goes in there. But now here you can see what's happening tomorrow. So you saw this yesterday, not today, yesterday. Tomorrow, the US inflation rate, if on true inflation, is projected to fall. Wow, that's a significant number. That's 20 basis points. That's quite a lot. Why is that? You can see the drop here. You got a visual here associated with that. Here you can see the drop. So again, here is the mail sent to premium subscribers. And you can see here what's coming. So again, here's what's coming. You get it in advance tomorrow, right? So you've already got insights before everybody else. And what is driving this down? You can see the components that are really driving it down. What matters? Utilities, transport. Transport is the biggest item, right? Transportation is really nearly 20% of household expenditure. How do I see that? You come back to the inflation metric here, you go to composition. You can see here transport. What is transport? Ooh, 19.83%. Multiple transfers. So we're soon going to have an index for transportation index. So you can benchmark the transportation index. Why? A lot of our users have asked for more insights around vehicle and transportation data. So they want to see vehicle numbers. They want to see, so you can then highlight in here the vehicle numbers, how it's moving, and look at that big drop in the vehicle purchases. What is driving that? How come? How is that happening? And so in the newsletter, you can see, so not only do you see 20% of household spending is on transportation, you can see a big drop in vehicle purchases, which is a part of the household index that we have. And why? Because you're leasing the car generally. You've got it on a loan. And so you're constantly paying month on month, you're paying a fee to have that car and maintain that car. But again, coming back to the newsletter, what happened, right? Used cars, right? So there was a big shift in used cars. There's a big shift in gas prices. So all of gas prices continue easing in the US, right? We can see also the production of gas is going up. So the U.S. has been, at the oil pump, putting out a lot of new oil. Used cars here. Why is it? Wholesale prices dropped. Retail prices are down 0.5%. Model specific data year-on-year declines. Tesla Model S is down 16% and Y is down 14%. That's pricing declines, not sales declines, right? And those are the sources. You can see where, again, additional real-time information is coming in to the Truth network and being displayed on Truflation thanks to Car Edge and Car Scoops. So again, utility, another big spending category. It's about 10% of household spending. Let's go have a look and see if I'm right. Utilities, what is that? Yeah, oh no, only 6%. Sorry, 6% of household spending. Obviously, gas drives that. Natural gas dropped quite a bit, as well did the price of electricity. Again, that's Truflation. That's the stuff you get in advance, helping you then be able to make decisions in terms of how and what you need to do around Truflation, and how Truflation then, what can I do with that? How, if I know that, how does that help me? That is things that we are working on to bring better signals to you so that you can trade accordingly. That's sort of really what we offer in Truflation and our paying subscribers. And that's why, again, we have a special promotion for you. Just remember to use the code bonus 6 months at checkout. Bonus 6 months, all one word, bonus, 6 being the numerical 6 and not written out. That's sort of what we've been going on and talking about. Tariffs, obviously still a big topic, the negotiations. There's right now, an ECB forum here in um, just to show that I watch this stuff and I look at this stuff. But here you can see I'm halfway through, but to get you the best insights that you could possibly have. But here you've got ECB forum with Powell on stage. So we're tracking Powell. You've got the British, Chinese, Japanese, and sort of central bankers all on stage talking important and yeah, throwing your money out the window. Sorry, no. But one of the big topics is still tariffs. How do you deal with tariffs? And what's going on about tariffs? And so this just came out. I'm sure you saw this. Trump plans to respond to the new tariffs on Canada in the next week. So basically, yeah, are having a hard time negotiating tariffs. So they fell apart, walked away from each other. And yeah, so well, that was on June 27th. Maybe they're back together again. Who knows? I mean, these move really fast. There was this discussion around technology companies and a tax on tech companies, right? Yeah, so they were trying to put tax on tech companies exporting tech services, so social media. How do they do that? I don't know. YouTube. Yeah, I mean, must be Facebook, Grok, Twitter, X, all of those services. And by the way, no other country has managed to build anything like that because they just ban freedom of speech. And so, as such, there's no interesting engagement there. They stop innovation. And so, there's no active tech companies anywhere else. As you saw when we were talking about it last Thursday, sorry, when we had Jeffrey Sachs talk about Europe and what the struggles are with Europe. But anyway, that was really the summary there. I think the big thing right now, though, is I was talking about Bitcoin, crypto. You're seeing a lot more the narrative shift about where to put your money and how you can do with all this turmoil taking place. Where do you put your money? Right? Yeah, so you saw Peter Moloch here. He used the Charlie Bilello's graph. Sitting in cash is the opposite of investing and invites long-term dramatic underperformance. Holding cash is basically begging the Fed and Congress to light your money on fire via inflation. Money printer go burr, right? Right now, the money printer is going up. We all know money supply is growing in the world. China's been printing a lot of money. The US is starting to print a lot of money, and the ECB has been printing a lot of money. So everybody around the world is just printing a lot of money, meaning a lot more money is coming into circulation. That means the existing base of money is being debased. And so there's just more and more money. So that means that there's more in circulation, which has an impact on you. And as we all know, if you go back to Truflation, they have a nice button over here that allows you to say aggregated inflation. US inflation in aggregate since 2020 is 30%, nearly 30% less purchasing power in the first half of 2020 of this decade, right? So in 5 years, you've lost 30% of the purchasing power. But if you go to the UK, it's even worse. It's nearly 50% in aggregate. UK, what do we got? 34%. Huge jump here, which was due to utility rates that really went high over a period of time. Actually, I'm not quite sure when what that was. Yeah, I think it was this year actually. So something drastically improved. Yeah, or increased this year, but now 33%. I mean, that's a lot of loss in purchasing power. And I guess that's why a lot of people are upset too, right? I mean, so go figure. Um, but I think also the governments and these central bankers are beginning to struggle, right? They're realizing that people are no longer holding cash. They don't know where they're putting it. And so they're trying to shut down Bitcoin. You heard on Thursday, we talked about Lagarde and what she's trying to do, the European Central Bank. They see the threat of crypto coming into the market and they talk about it regularly, right? But investment advisors, big financial advisors like Rick Edelman, are telling you to hodl, buy Bitcoin anywhere between 10 to 40% of your portfolio should be in crypto. And I've told you also in the past the amount of conversations I'm having or questions I'm getting around crypto and what to do with it. So a lot of it's changing, and time to think of a strategy. And I can tell you one thing: the people running economies do not have your savings at heart. And I think it's definitely something you want to take control of. Yeah, not only tariffs, I talked about tariffs briefly, but also interest rates really matter, right? Yeah, so Trump wrote a quick note, took a screenshot of all the countries and interest rates, right? Switzerland, number one, they're now at the lowest rate, nearly about to enter into negative rates. I talked about that last week on Thursday. But yeah, 0.25%, about to go down. Why? Because the Swiss franc is so high, it's really helping or struggling to make export work, because export is so expensive if you're buying Swiss products, and it makes their products extremely competitive from a pricing perspective. The dollar, on the other hand, is so low, which is actually supporting exports and will make up for any tariff that's put in place on the flip side. And if you're domestically, it doesn't really matter. So those are things that are happening. Will Jerome Powell, as usual, too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars being lost. No, what's okay? No, I don't know. I can't read his writing. No inflation. No, you tell me. No inflation. Okay, no inflation. What am I doing? Anyway, sorry guys. I just wasn't paying attention to that. Either way, um, that was it. Poly market still doesn't see a drop in interest rates, about 82% chance. If you buy a 50 basis points drop at $100, let's have a look. What's it doing? Let's do $100. You're going to work away with $8,333 if he does drop the rates. Yeah, it's slightly down from 93%. So if you go back a bit, let's say, I don't know, sometime still in June. So sometime June, it was still up at 93%. It's come down to 80%, hovering around the 80% range. So yeah, let's see. Fingers crossed he drops it, because that'll definitely bring about a interesting economic times and be change this graph that we talked about earlier significantly. So yeah, that's it. I think did I share this graph? Yeah, this graph we were talking about. Yeah, that's it. I mean, on the positive side, right? We've really seen some big changes come in. Yeah, Eric Dougherty wrote here, after major efforts to cut waste and fraud, Social Security handout just saw the largest single monthly drop in history. So look at this drop. I mean, it's huge, right? A significant drop from nearly 1.7 trillion dollars. Is that it? 1,700 billion, which is 1.7 trillion, dropped to 1.5. That's a $200 billion drop. Is that right? That's huge. And why is that? Because all of a sudden we're not paying 199-year-old people Social Security. Go figure. Um, I think the rest of the world should be auditing the governments. How are the governments spending money? Where are they spending the money? And the thing is, they're spending it everywhere a little bit. No, it doesn't really matter, because it's only a million or 5 million or 10 million or a billion or 100 billion. It's nothing. It's only a trickle. It doesn't really have an impact on anything. So let's not worry about it. But to you and me, a million, 5 million, 100 million, that's a lot of money. And we could do so much more with that. Imagine all the startups you could fund. Imagine the new jobs you could create by focusing on scaling up startups, not incumbent companies, but startups. And I think that's really where the world is really going. And it's actually getting really scary. I saw this tweet on the weekend, which really woke my eyes up. And this is about central bank, right? So the European Central Bank, there is an urgent need to channel retail savings into capital markets to develop those markets and finance EU priorities. An EU priority? What is an EU priority? And how is that related to my priorities, or the sole priority on having my savings accumulate in terms of growing, and by investing in s- areas that are not working, or in having a EU representative allocate funds, is not really the way I see my savings working for me. An EU saving standard could increase a saving standard. So we're going to set another regulation that's going to set a standard for you. Could increase retail participation, benefiting savers, boosting investment, and supporting strategic priorities. I don't know. They haven't done a good job in the past, so I would the last people I would trust with is looking at the ECB. Anyway, so we looked into that. There's a really good video out there. If you're interested in this topic, check out Luke Mikic. He's been talking about this. Does a good detailed video podcast. Watch it. I'm not sure. It's about 35 minutes. Really good insights, and he breaks it down really well in terms of what is really going on. It's pretty scary if you think about it and you actually watch this, that the people in charge do not have your interest at heart. They do not have the population's interest. And in fact, they're doing the opposite. They're bagging their banks. They're actually filling their pockets with your money using taxation. And they don't really have any interest in mind um, for what you, I mean, look at the debt growing everywhere. They're spending the money and where they want to do it. They're trying to control. And if you look at all the wordings, they're treating us like we have no brain, we are incompetent, and we do not understand what they're talking about. So shut up and just let me run. And no controls, no checks and balances. So it's a lot of room for improvement. Anyway, he does a good video. I took that away from that video, but there are a number of different, aspects that he brings up. Right, there's a paper that they wrote out. This is an urgent new need to channel retail savings into capital markets. And I think all they're trying to say, so in fairness, they're trying to say that the savings need to move from cash or bonds into equities. So buy European companies. But where can I buy European? I have to go to the French market. I have to go to the Danish market. I have to go to the English market. I have to go to the Frankfurt DAX. I have to go. Everybody's got their own exchange, and there's no liquidity on those exchanges. So why don't we just allow for one currency, one exchange, two or three exchanges? That's it. There's all the liquidities there, and we can trade off that. And by the way, if everybody's always speaking English, a common language, we can actually all communicate, understand all the documentation versus it being written in 26 different languages, causing a huge amount of cost to the listing requirements, the equity elements, and there's no innovation in these markets. What can I invest in? European wealth managers, big banks, and anytime anybody tries to innovate, they can't do that. So how and where will innovation come from that makes it attractive, as technology is where the future's at? And the other thing he goes in to talk about, he highlights, yeah, so this is the report that really goes into that detail. You can read about it here. But then they also go into the whole rearm Europe. So they want to use your savings account to fund old incumbent multinationals that are out there to build the old army, sort of missiles and weapons that they built in the past, instead of finding new robotics, investing in drones, investing in chipset companies, investing in the software to manage and optimize the chipware SDKs, tool sets, AI that's going to help build out applications that are going to run around those drones and robots, right? All of those need investments, and that's the ecosystem. If I can save $100 million that nobody else cares about because it's too little for any government, but that would fund 5, 6, 7, 8, 10 new startups in the robotic landscape, get them off the ground, see where they go, and feed them. And we need to invest in 10, 12, 15, not just one or two, and hope that that one or two is going to be everything. And it's only going to be successful. Then you need to invest in 10, 20, and do venture investment and treat it as an adventure. It's an experimentation down a path that sometimes may be successful. And that one time that it is successful, it will make up for all the other times that it wasn't successful. But if you stop at one and you only bet on one horse, then it's really hard to find the next champions out of Europe and with all that talent. Anyway, he goes on into the video. Check out his video. It's really good. I recommend you look at it. Yeah, sort of that's sort of the mix of what's going on. And I think in summary, uh, yeah, I think where is it? Anthony Pompliano sums it up pretty well. Yeah, and always good comment. Watch his shows. He's got it's a quick 20-minute show or 50-second show, but the economy is about to run hot, hot, hot. Bitcoin is going to gazillions. And so, where is Bitcoin today? Bitcoin right now is at your chance to come in or not. Do your research, make sure you do it properly, but 106,000. So, it's been a bit of a flat day, but it's holding steady around the 105, 100,000. And as we know, it changes on a day or on a couple of days and has a significant life changing impact on a lot of different people. Anyway, that's it for me. Hope you enjoyed that. I'm back again on Thursday, same time. So please follow, subscribe, like, and check out the promotion that we've got on Truflation. You might find that useful, and a lot of people do. So I'll leave it up to you. Again, have a happy day, Tuesday, and we'll see you again on Thursday. Thank you, everybody. Hope you enjoyed it. And yeah, let me know if you have any questions. Hope the mic worked this time. Thanks. Bye for now.